Hello students, how are you? This is the second lecture of life cycle costing. Life cycle costing. In the last lecture, we have started that normally, traditionally, we were making the yearly accounts. Means on the yearly basis only we are saying the income and expenses and all. We were not focusing on the life cycle, complete life cycle costing or calculating the revenues for complete life. But life cycle costing says that track and accumulate the complete cost and revenue over the life. What is the benefit of that? Obviously, when you will take the cost of complete life and divide it by the units of the complete life, you will get the average cost per unit, and it will help you to identify that cost. That is an average cost. Obviously, the cost. If you are selling for more than that cost, obviously you will earn the profit over the life. So in the starting years, obviously, we know that there's a lot of cost at start, but it decreases over time. So some businesses, what they do, they get panic at the start that the cost is so much, and how we'll be able to earn the profit. But that's not the thing. Life cycle costing calculate the average cost per unit for the life. If you are selling for more than that cost, then obviously there is no issue. Then we studied the stages, to which I told you that read this stages, and after that we understood some concept related to the maximization of the return of product, and the factors were like design cost out of the product cost, and after that minimize the time to market, minimize the break-even point, maximize the length of life cycle itself. Now there is a question here. We'll do this question first, and then we'll do some theoretical point, and our chapter will be completed. Okay, so let's start the question. So Enrono is an accounting software package which has 6 year product life cycle, and obviously all the life cycle years of all the years in the life cycle, obviously they have given all the costs. These are the costs that's given from this to this. Units they don't have provided us, they don't have mentioned here, but I am mentioning here because it's year 3 in which production is starting. So at the first year the units were 400, then 350, then 420, then 430. So these are the units over the years. So actually we want to understand the concept, right, of life cycle costing per cost per unit. First of all, we have to calculate life cycle cost per unit. So for that we need the cost of entire life, because life cycle cost per unit, the formula for this is cost of entire life. The cost incurred in entire life, no, neither of the cost will be obviously ignored here. All the cost will mention divided by total units of life. So if you see, the cost is being incurred in the year one for research and development. It's the research and development 275. And obviously, in this year, no production is done because there is no production cost. It means it's the year of research and development. But what will not say that in this year units are not produced, so we'll not add this cost. No, we'll add every cost, and from the entire life, take all the cost. So this 275 will be the part of the cost, plus 1000 is common. 1000 is common, so let's ignore that. After that, in year 2, there was a design cost of 120. We'll add that as well. Plus these all cost we will add. These all cost will add, like 120 plus 200 plus 200 plus 100. Calculate it. Let me calculate it completely. Okay, so 120 plus 200 plus 200 plus 125 plus 170 plus 130 plus 60 plus 20 plus 20 plus 15 plus 10 plus 5 plus 15 plus 30 plus 45. It's 1165. Complete cost I have calculated divided by what's the units. Units are like 400. I'm adding all that, plus 350 plus 420 plus 430. Just add all of them. It is 1600 units. So 275 cost plus 120 plus 1165, 1560 divided by 1600. Final answer is dollar 0.975 per unit. Dollar 0.975 per unit. So what we have calculated? We have calculated life cycle cost per unit. I know in the starting years, actually the cost is more and over the time cost decreases. But I'm not focusing on the yearly accounts right now. I'm discussing life cycle cost. For the life cycle cost, you will not see that it starts at higher and at after what it's lower, or there is some cost that is pre-production cost like research and development or design. We'll mention all the costs. We'll take all the costs, add all of them, sum up all of them divided by sum of all the units, like divided by units will get the proper life cycle cost per unit. That is the average. That is the average, obviously, of complete life. Now, it helps us in decision making today. That if this product, for example, is selling for, if this product is sold for more than 0.975, obviously at last we'll be having the profit. Obviously at last we'll be having the profit because we are selling selling at more than the average cost per unit. And I know at the start, wait, I know at the start the costs are higher. I know at the start the costs are higher. So with the passage of time, cost gets lower. But life cycle costing concept is like take all the cost divided by all the units, you'll get the average cost per unit. So that's why if any question comes in MCQ like calculate life cycle cost per unit, never ignore. I am writing here again. Never ignore any cost. For example, there are some costs that are pre-production costs. Pre-production means production is not started. So student thinks that these two costs, the units are not produced in these years. So let's ignore it. No, take it as a cost. You have to add it in the cost and then calculate life cycle cost per unit. Okay, let's go to the next part, that is the theoretical part, benefits of life cycle costing. So I'm going to read these and we'll discuss it. So there are many benefits of life cycle costing. First of all, it draws the management attention to all costs. Basically, life cycle costing says that focus on all the costs. Never ignore. I've told you pre-production and proper pre-production and post-production take all the costs. So it draws the management attention to all costs, even its production, even its non-production, even its pre-production, even its post-production. So that's of like we do not categorize like this is this type of cost, or we'll ignore it. No, we'll take all the costs. Which other costing methods usually treat as period cost, including marketing, design, and research and development? Because basically, when there's a traditional accounting, so what happens to calculate the cost per unit? Traditional accounting says take only production cost to calculate cost per unit, and after that when we're making SPL, deduct that non-production cost as expense from there. But lifecycle costing says that don't take it as a production cost and non-production cost. Take all the cost. So if the managers are focusing on all the cost, obviously they will take good decisions. They will take better decisions than in traditional accounting. After that, it focuses on measuring the product cost from concept to withdrawal. Concept to withdrawal means from development stage to decline stage. So actually, it focuses on entire cost. This is the huge benefit. It focuses on entire cost from start 0 point to end point. It focuses on all the cost, consider it and calculate. Basically, all the benefits, you'll see that they are rotating they're rotating around the same concept, same point, that all cost, the cost from start to end, like, and another, let's see, if see it aids understanding of relationship between decisions at decision stage and the cost of other functions such as marketing. Again again the same thing. Basically, when you are focusing on all the cost at once and you are focusing on the cost from start to end, so you will take good decisions. You know that at this selling price we have to sell. You know that average unit, the unit is costing you averagely, like for example, how much? 0.975, as we have discussed. So they are like helping you to take the better decisions. You, because in advance you know that average cost throughout the life is this, so you can take decision whether to continue with the product or not. So like these types of decisions. Okay, it focuses on the long term returns of the product. Again, in yearly accounting, what you will do, you will see only the year, that in this year we earn more and we incur less cost, so we can gain the profit, obviously. Every year start your own tension. You are worried that obviously you will say that for this year just earn more than the cost so that we can get the profit. But you are not focusing on the long term, you are focusing on the short term within the year on year basis. But life cycle costing helps you to see a long term picture of the product. So long term picture means better insight of the product, better decision making, better control, and all the factors are better than in traditional costing. So it helps you to focus on long terms. Again, the thing that it's rotating around the one thing, that focusing on all the costs from starting to end. That's the main point. That's the main benefit. Okay, management can make better decisions. Again, same point. So actually, benefit of life cycle costing are just two here. Actually, focusing on all the life at once, all the cost at once, and focusing from totally start point to end point, ignoring neither of the cost. So that's why these all are the benefits. These two are the basic benefits, and they have just divided into 5 points. And one thing more, in exam sometimes they ask you these in MCQs, what are the benefits of life cycle costing, give you 2 to 3 benefits and two maybe irrelevant options, tell us 1 2 and 3, 2 3 and 4, like that. So focus on these types of theoreticals, like benefits, advantages, disadvantages, features, like characteristics. These types of theoreticals are very important. These are short, and students think that they are not important and ignores them. No, don't ignore them. These are basically the short points that are being tested more as compared to main topics. So focus on these as well. Now the last topic is life cycle costing, life cycle in service industry. You know that service industry is the industry in which there is no product, only the services are being provided. Their life cycle costing also helps. Their life cycle costing also, this is also a benefit actually, that in service costing we know that there is no product, but obviously we have to provide the service. For example, one company approaches me, and company wants that we are basically audit firm, and company have a contract with us for 5 years, that will provide the audit services 5 years. So we know that the life of the service is 5 years. Life of the service is 5 years. So we can use life cycle costing here by calculating the entire cost throughout 5 years from starting to end, and just dividing. Now there are no units. Now there are no units. Obviously, how we'll divide and calculate life cycle cost per unit? But obviously we do not have units. I know, but we do have a visits. We do have a services. Obviously, we have to go every year. So we'll calculate that if, for example, in the 5 years, we calculate all the costs, traveling and all that, just like testing and equipment and all that. Complete cost of 5 years is like, I know, I think 10 million. I'm just assuming that 10 million. And we know that we have to provide services every year one time. So divided by 5, we know that every year it will cost us 2 million. Every year it will cost us 2 million to provide the services. Now, what I will do to the company, the company will ask me that how much you will charge. So I'll say I will charge 3 million, I'll charge 4 million, because I know that 2 million per year it's costing to me. So I'll charge more than that to earn the profit. So life cycle costing also helps in service industry, along with obviously product industry. So this is very much important concept. Like all costing techniques, ABC techniques, we have studied, target we have studied, life cycle we have studied. Every costing technique has its own logics, on formulas, like unique concepts. So we have to understand that. Life cycle costing, the topic is ended here. Now, next video, obviously, we're having the practice for that. Meet you guys in the next class. Till then, take care. Bye.